Hello, everybody. Welcome to Wednesday. The S&P 500 was down just a little bit, 0.03%. And we broke the 5-day track record of up yesterday. And today in our accounts, we broke the 6-day track record of up, unfortunately. But we've had a really good 12 months. If you remember back 12 months ago here, the 10th of February of 2020, we were very close to the high for that year prior to the pandemic. The high was the 19th. Our rate of return since that point, including the big dip that everybody suffered through with the pandemic, has been really, really decent. So I'll give you some numbers. All of our stock positions, ETFs, individual stocks, legacy positions that people brought in that we've built around in that time frame in the last 12 months, up 41.1%. And this is 22.3% higher than the broad stock market itself that we compare to, what's called the class blended benchmarks. And that's unbelievable. And so then the bond market, not as good for us, up 2.6%, and we're actually 0.3% behind the broad bond market, mainly because of our reliance upon treasuries during a big chunk of the last 12 months. I just wanted to make sure we had some protection against, potential losses in the stocks if it should continue down, during this pandemic piece. And we're trying to improve on that now, but still very happy with that. What that comes out to after all fees and any other costs, we have a 25.0% rate of return over that same 12-month period for our average client, which again is about 66% stock and the rest in bonds and cash. So really good time frame. We're bound to have some pullbacks, which we've seen today. Was no big deal. Chairman Powell came out from the Federal Reserve and spoke today, and we saw market go kind of crazy about that too. Every time he speaks, it does. But he did say they're going to keep interest rates low, and they want to see a robust economy. They want to see closer to full employment before they start tightening things up. That's a great thing for the stock market. And of course, he talked about the need for more stimulus. So hopefully that helps get that package through also. We've had really good news so far in the earnings front. 80% of the S&P 500 companies have reported earnings so far for this quarter. On average, they're 17% above what was expected, which is fantastic. So good time frame. We're in the right spots. The pandemic has pushed, the whole world probably 2 to 5 years ahead of where we would have been without it in terms of robotics and technology and all these areas that we're in, the genomics, and even the new vaccine, this messenger RNA, is a revolutionary concept that might help, propel medicine forward. Again, we're in those spots. We've been making money because we're in those spots. I think we'll, hopefully continue to do well there too. So we'll see what happens. We are watching, of course, and if something else comes up and something doesn't do as well, we'll take care of it. So look forward to seeing what's going to happen tomorrow. Thank you very much.